Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. I am joined today by Dave Lukas. Over here today is Monday, the 6th of October. We've gotten into the fourth quarter, and you know what? We never had that September swoon that we were looking for, that everybody was looking for, and the fourth quarter seems to be starting off real strong once again. So, shut down be damned. The market wants to go higher, and there's actually Dave was talking about this the other day. There may be some reasons why the market's going higher during this shutdown, which I thought was interesting. So once again, the majority of people that are, scared to death about every negative data point are usually on the wrong side of history. So Dave, what are you
Yeah.
seeing out there, man?
Yeah, so you kind of mentioned it. Markets love gridlock. They like when nothing happens. So what happens in a shutdown? Nothing. So everything keeps going along. I mean, I don't know about you guys, but nothing's changed for me. And so for the majority of people, it hasn't. And so the markets are like, great. You don't have to worry about any risk. We don't have to worry about Congress passing some obscure law or doing anything. So it makes it better for markets, right? So that's kind of where we're at now. If this thing prolongs for months on end, that may change it. But as of now, the market loves it. And I, I if there was a chance for maybe a little bit of a, you know, I guess volatility, maybe 3 to 5% at the most for maybe a day, right? Like that's might be what we see. Maybe it happens over the next week or two, 7 to 10 days. But I actually think we're getting into the euphoria stage of the market. And Doc, we may want to bring a chart and show this because the market goes through four phases. Always remember, four phases of the market: disgust, disbelief, acceptance, euphoria. And so disgust we had in the spring, right? Disbelief is the rally, right? Oh my gosh, it's rallied all the way back up. And then we get acceptance, which is okay, you're back running again, we're a bull. And then you get euphoria, which is this like crazy parabolic tail end to it where it's just, animal spirits. Like you were saying to me, Doc, we're looking at the market running up today. We saw the AMD news, but futures were up before that. Like, why is the market going higher? It doesn't need a catalyst. It just goes. And that's what you start to see in euphoria. So you can show that on the charts there and talk them through it because it's really important for people to understand this.
So Dave was saying, step one, markets always go from a period of, in this case, we sort of had euphoria as we finished out 2024, and then we'd got a whole pile of disgust. I forget exactly how much this was down, but it scared the living daylights out of most investors. And then here comes the disbelief. So again, this is the disgust. Here comes the disbelief rally. And this is where once we got above the 200-day moving average, I thought there was a good chance that this thing was going to run. Even though in the back of my mind, I was looking for, like everybody else, I was looking for some type of, second lower high and a move down. But we kept past the disgust. And as we started to make new highs, this is where we get into acceptance. So acceptance came as we started to break slowly above 6,200. The only pullback that we've had since April has been this one, this 3.3% pullback at the end of July, and that was it. That was a 2-day wonder. And since that point, we've been grinding higher. And that is the way that markets go when they're extremely bullish and no pullbacks are allowed. So every pullback has just been microscopic because there's so much demand that is sitting just below the price looking for any kind of pullback. And that's my concern here is that like everybody's waiting in a pullback and we may not get one because of that. So what institutions are having to do is to hold their nose. I mean, they're famed for being so logical and so disciplined, but right now they're being forced to hold their nose and jump into the water. And as we say so often, the greatest pain that an investor can feel is to be on the sidelines while everybody else is enjoying the rally. And so eventually what happens is everybody piles in. And this is where we get into euphoria. And so this is obviously very subjective. There's no way to objectively or clinically analyze this and say, okay, yeah, we're at euphoria. A lot of times what people can do is they can go, let's see, I haven't looked at this for a while. Let's see if we can find the RSI. Um, let's see, Connor's RSI. Let's go with the regular. I know it's around here somewhere.
Hmm.
Just a second here. Well, I'm going to go with the RSI 14 in McClellan. So RSI 14, if you look at this, it is just into the overbought. Above 70 is considered to be overbought area, but it's not by much. It's not by much. And look at this area here. So we've been basically running above 65 to 70 for a long period of time this year. And so it's going just fast enough. It's going just fast enough so it doesn't exhaust itself. So what both Dave and I are looking at this thing going is that we could get into one of these modes where kind of like what we saw back in 2018. So 2018, if you guys remember, 2017 was very similar to this. It's like just kept on grinding, grinding, grinding. Then we get into the end of the year and we finish out real strong and everybody says, okay, that's it. That's all we're going to get. And what
See that
happened?
parabolic tail that just goes
Yeah,
like straight up?
this is what just blew everybody's mind here is that move into the end of January. And then of course we had to pay for it. Here's the pullback that everybody was waiting for. And it was I want to say it was pretty close to, let's see, 280. Yeah, it was pretty close to, it's well over 10%. We'll put it that way.
Mm-hmm.
So this is the pullback everybody was waiting for, and then they, of course, they jumped on it. But you know, that was a very volatile year. So we could be seeing the same thing right now. We could be seeing one of these moves where we just we think it's tired. We think we assign all kinds of, you know, evaluations to it. Well, it's exhausted. It's overbought. It's tired. It's this. It's that,
Mm-hmm.
and then it just continues to go because we're
We
just
saw
not
this
getting the
a
pullback.
few years back when the when we came out of the bear and the bull started in was it 2022 or 2023? It started like literally there was a down move in October and then from there it just went straight up through the end of the year. Um,
Oh,
2022 or 2023.
um, I think it was, yeah, it was the end of. All right, so there's our little COVID guy.
Hmm.
Okay, so you're talking about the end of the bear. So here's the end
Yeah,
of the bear in 23. I'm sorry, in 22.
22.
Yeah, there we go. There's
And
the
it happened
bottom.
like clockwork. Like mid-October is like when it all changed.
So this did take a while to go. So we finally broke higher, and then what happened was we got into a larger time frame consolidation pattern, and then once
There it
this
goes.
trend line broke to the upside, which is the end of October, this thing was off and running. Right? So range contraction leads to range expansion. So we just went nuts. Now the difference between this move and the one that we're seeing now is if you want to see really really strong price action, you see it off the bottom. And so
Right.
right now we're at the top obviously. And so the 2018 the January 2018 move is probably the most extreme example of something like that I've seen.
Mhm.
So
But that's the thing in the end of bulls are always you go parabolic and you have a major pullback that's like a warning shot and then it recovers and gets everybody back on and then that's where it starts to get unstable and falls apart. We are nowhere near in anything like that. It is such a steady grind right now. And until we see that steady grind with a parabolic tail start to turn into bigger noise, right? We're headed in that direction. The money on the sidelines, there's still about 7 trillion in money market accounts. As rates come down, that's going to continue to flow out of there, probably back into the market. Fed's cutting rates, that's more liquidity. So we have a shift now. So remember when we went into the last bear was because we shifted and had a structural change from a
Right.
ZERP environment to a higher interest rate environment. Now we're having a structural change from a higher interest rate environment down to a lower interest rate environment again. Probably not going to ZERP, but a lower one. And so structural changes always cause, bigger, longer term trends in either direction. Policy changes are much faster, usually within a few months. COVID was an example of that. Tariffs, this year was an example of that. So we're in a structural change, and it just looks right now like this thing is probably going to keep going. There's not anything really to damper it, right? The news is pretty good. Economy's doing, pretty well overall, although we've talked in here about for the bottom 80%, it's probably not as good as the top 20%, and that's going to continue to widen. But the stock market is not the economy. And the stock market is also a reflection of the devaluation of like the dollar. Dollar's down over 10% this year. Gold, another all-time record high today, almost at 4,000, right? So a lot of this, the asset appreciation is a reflection of the devaluation of the dollar too. And that's going to continue. So that bodes well to keep this thing going. Doesn't mean we won't get that 3 to 5% pullback or so, but definitely bodes well to keep this thing going.
The thing that I've always found is, when I first started investing, 25 years ago, I was like everybody else. I was like, well, let's go find the quality stocks, and then we'll use technical analysis to determine where to buy them. So we'll do fundamentals to do what to buy, and then technicals to say when to buy. So I bought into that and I put a whole bunch of effort into that. And what I found was eventually the market didn't care, right? The
Nope.
market didn't care. And I stopped doing fundamentals because the fundamentals, it's all about the price. So you can bottle up your fundamentals based on what the market is. The price is the ultimate arbiter of the value of this asset. So people can argue all they want in terms of, oh, look at the PE ratio, look at this valuation. This is historically overextended. I'm sure it's going to be different this time. But everything is bottled up into the price. And right now, until I start to see some instability, I have to assume that this is going to remain in that type. So we have what's called a quiet and trending market right now. So it's the volatility is very low. If we look at the VIX is very low right now, although it was up a little bit this morning. Let's see, VIX. I mean, it's down. It's down. It has been lower in the past. So it's down. It's starting to show a little bit of negative divergence. So somebody knows something, and somebody's starting to hedge against an event because the VIX is sort of creeping higher. And that's one thing that we can watch. I mean, if you go back in time and look at some of these moves, like we saw the same thing back here right before COVID took off. Somebody knew something here. So that is definitely one thing you want to watch for. If we start to see the market going higher, the price of the S&P going higher, and the VIX going higher at the same time, that is actually a negative divergence. So that is somebody knows something, and that may be a time where you might want to consider. You can see here at the end of 24. At the end of 24, somebody knew something. As somebody was going long on volatility, and that paid off really well. So if we continue to see this going higher like this, then we'll more than likely start to do some very protective trades to make sure that our downside is hedged off. Any questions out there from anybody watching today? So I realize most of you are going to be watching this on a replay later on, but for those of you that are joining us live, be happy to look at any assets or take any questions for.
There's a couple things too if you keep that chart up. So we're seeing that on the VIX. So what could it be? Like what could be causing some of that? Could it just be that, these bigger firms are having to hold their nose and invest, and put money to work in this, but at the same time they're hedging their bets some. Could be some of that. Japan's longer term bonds hit like over like 3.2%. That carry trade is having more issues. Could be that, right? So there are things that are always, kind of, there's always something, right? And if we do get some big correction, that comes out of nowhere, hindsight will be 2020 and there'll be some excuse for it. And the market just needed to pull back to keep going higher, really, probably in the end. But we are seeing things juice the market. So, probably seen this, but you can pull up the chart of AMD doc, showing what AMD is doing today. Big news before the market that uh, we've got the big investment with AMD and what's it called? ChatGPT. Um, so there's a massive move up in AMD today on that. Now, that's the interesting thing we keep seeing at this level, and there's a lot of jokes being made about how there's just all this money that just keeps moving. It's the same pot that just keeps moving from everybody, like NVIDIA to CoreWeave to uh, you know, um, ChatGPT back to Microsoft, back to NVIDIA, back, So is there real value, new value being created, right? And so there's a lot of evidence showing that it is a lot of the same money being passed back and forth between a lot of these companies. So like musical chairs, where it stops, nobody knows. So at some point that could stop, and that could be that. But big investment with I keep saying ChatGPT, but OpenAI and AMD today that is, fueling some of this. Obviously the tech side of this rally today too. That's another thing that if we keep seeing those things, those big money deals coming, right? That's going to keep it going. The other thing is the energy side of this. So, I mean, how does the energy sector keep up with the demand? Because the amount of demand for this AMD OpenAI data center they're talking about doing is like the state of California's energy demand to power these things. So that's another thing to watch, which is why a lot of those little nuclear and companies like that, Oklo, NNE, things like that are taking off. And now we see Bitcoin getting into the mix. So Doc, you want to kind of talk about what's going on with Bitcoin? Because this looks like it could be into a weekly swing higher towards that 150 mark we've been talking about.
Yeah, we got a question that came into the chat here through Anthony, and he was saying, could you look at BTC with RSI? So this is our standard RSI, and I usually use TradingView on Bitstamp to look at. That is a spot brokerage that's been around since dirt with Bitcoin, so it has the most history. So you can see that it is the RSI 14 is indeed, it's above 70. It's getting to a level where we typically will flag out. This is what we've seen. When we say flag out, this is range expansion goes to range contraction. And so what I would anticipate is that we would probably flag out. And one of the reasons for that is because if we look at the actual energy involved with Bitcoin, we are on the floor. In fact, this is the lowest
No,
value.
that energy is different. Yeah.
That's the
I was
lowest.
talking the energy requirements.
I'm looking at the yellow line here. This is the lowest value that we've seen really since this point here. So this is kind of when we had our last breakout about a year ago. And we got down to a similar level, but look at this. Range expansion goes to range contraction, and then it just keeps on going. So I would kind of anticipate using the same thing. Now, Dave talked about potentially setting up a target for this. Now, I'm not a big believer in predicting the future, but what we can do is we can go back and look at chart patterns which have predictive values to them. So here's one of them. This is a very classic chart pattern. This is a cup with handle pattern. I'm looking at the weekly chart, and the way that you anticipate potential measured move is I'm going to measure the top of this neckline to the bottom of the formation, and that delta P is represented by this yellow line. And then what we do is we assign that, or we extrapolate that from the breakout from this pattern. And the number that we got was a 122. And 122 was what we saw. And in fact, we did get that early July of this year. So that was a sell point of 1/3 of my assets. Was I want to make sure that I'm selling these into strength. I'm not gonna watch this thing go back down again. So I've gone through several bull markets in crypto, and each one of them, you go through the disgust phase saying, oh man, I should have taken profits up there. And the only way, you'll never spot the top. The only way you can do that is to sell into strength. And so what Dave is saying now is that we've got a similar, smaller pattern, which is this cup
It's
with
almost
handle.
a miniature cup with handle that's set up and is starting to
So
break out.
markets are fractal because they'll spin off, a large pattern will spin off a bunch of small little patterns like this. And so this pattern, this fractal pattern will target about 145. So that's where I'm looking at my next pattern. We also, if you guys believe this, we also have a nice little inverted head with shoulders pattern. So here's left shoulder, here's the head pattern, here's the neckline here, here's the right shoulder, and this is what I was talking about in my service. Like, okay, if the market hammers off of this higher low here, this could cause a lot of shorts to be squeezed out. And this is absolutely what's happened here. And so we have the same kind of thing here. We have the pattern, the depth of the head pattern here. If we had attained or assign that to the breakout level, we're going to get about 130. So 130 is the next level for this. I'm not sure if it's going to go straight up there or consolidate for a week first before it gets up to there. And then 145. So will it hit 1 million? I don't know. I mean, there's a lot of people that want to know if we can hit 1 million or not.
Oh, who was it? I sent it out earlier to our mastermind, right? Was it Fidelity that's calling for 1 billion by like 2038 or something like that? And I'm like, these guys must be holding a lot of Bitcoin. They're trying to pump this thing like crazy. But yeah, who knows, right?
Yep.
So,
So there you go,
what will
Anthony.
IBIT be at? Like 10,000?
Yeah,
If that happens?
I don't know. I mean, I've actually, to be honest, I mean, I've been doing a dollar cost averaging of Bitcoin for a number of years now, and that's worked out fine. But quite honestly, I've done most of my investing over the last year through IBIT. So I've been using the wheel strategy, which is, sell puts, wait until you get smacked and run over, get assigned, and then turn right around and sell calls against it.
Yeah, it's
So
great chart for that.
so there we
And if
go.
the prevailing thought or the prevailing thought you have is that Bitcoin will continue to go up over time, it's a, good
And it's
trend to
still it's
follow.
still inexpensive right now. I mean, if you look at IBIT, if we look at the price,
70 bucks, 71 bucks today, maybe?
yeah. Oops, I
Yeah,
closed it out.
71 and change.
So IBIT is up at almost 72 right now. So I
Mhm.
mean, that's still, if you sell puts against it, you could sell a put down here for $6,400 per contract. Most people can afford a $6,400 margin uh, for that contract. And in fact, if you did
Oh, if
something
you're
like,
showing your screen, it's not popping up, so pop it up real quick.
oh, there we go. Okay, sorry about that. There we go. Okay, so here's IBIT at 72. And if you were to sell, let's say maybe a $65 put, um, let's see what that would run. So if you sold, let's see what kind of percentage return. So if you sold 21 November, and if you sold, what do we say, 65,
Mm-hmm.
you're going to get almost 3% for that. You're going to pull in a $1.85, which is almost 3%. And that's, I mean, that's easy money to be selling the IBIT at 65 right now. So I have multiple cycles going on of the same kind of trade. So you can think of it like rolling thunder, like this. So we're putting on a trade, setting it up, and then it expires. But we're not waiting until that expires. If you have enough capital, you can set up another one. So the whole rolling thunder approach. Okay,
Like a ladder.
guys. Any other questions? Any other questions here?
Hey, just to if you want to go a little less expensive, Ethereum, ETHA, you can do the same thing on that. It's like $35 a share. So there's opportunities for everybody in this market.
Yep. Yeah, it's only 35, 36.
The
Looking really good.
the only other one I'd maybe save for this week to watch, I mentioned it last week, is Tesla. So just keep Tesla's up today pretty good. It's got an event coming up, but it's had a nice run and it's still got some room to go. I mean, the weekly chart's just really getting into releasing there. So there's a lot of energy to drive that higher, especially if that event goes well.
Yeah, that came out of an ascending triangle pattern. So
Hmm.
it pays to know your chart patterns, guys. All right, everybody. Thanks for joining us here today. We will be back next Monday to see what happens with the shutdown and what happens with the market itself. We don't really care that much about the shutdown. Everybody else does, but the market we do care about. So thanks for joining us today.
Bye,
And
guys.
from Landrum, South Carolina, Doc is out. Bye, guys.